Welcome to Corporate Finance Explained, where we break down the essential topics every corporate finance professional needs to know. This series is narrated by AI, created using CFI's expert training materials, and designed to help you stay ahead in the world of finance. Enjoy this week's deep dive.
Hey everyone, welcome back to the deep dive. Today, we're going to be tackling a topic that's pretty essential for anyone in corporate finance.
Yeah.
Treasury management.
Yeah.
So we've got a ton of sources lined up, articles, case studies, all that good stuff. And, knowing our listeners, you guys are all about that strategic side of things. So we're really going to focus on how the big players are actually using these strategies in the real world.
For sure.
So get ready to see how companies like Apple and Microsoft are handling billions in cash, kind of navigating this global financial maze.
Yeah. What's interesting is that treasury management is often kind of seen as just number crunching.
Right.
But it's really so much more than that.
Okay.
It's the engine that keeps a company running smoothly, even when things get a little crazy.
Right. Okay. So it's more than just balancing the books then.
Yeah.
What does that actually look like in practice? What are we talking about when we say like the core functions of treasury management?
So I think of it as three key pillars.
Okay.
The first is ensuring liquidity. So making sure the company has enough cash available to meet its short-term obligations.
Got it.
Second, minimizing financial risk. So that could be anything from currency fluctuations to interest rate hikes, even cybersecurity threats.
Wow.
And third, optimizing capital efficiency.
Okay.
This is making sure every dollar is working as hard as it can, whether that's invested in short-term securities or strategically deployed for long-term growth.
I see. So it's about striking that balance between those short-term needs and the long-term goals.
Absolutely.
And I imagine that balance can be really tricky, especially in today's kind of volatile market.
Absolutely.
It can change at any moment.
Yeah. And, a good example of this is Toys R Us.
Oh, yeah.
They had decent revenue.
Yeah, they were bringing in money.
But their cash management was weak.
Oh.
They relied too heavily on short-term debt and weren't prepared when refinancing became difficult.
Interesting.
So despite bringing in money, they couldn't cover their debts. And, ultimately that led to their downfall.
Yeah, that's a stark reminder that cash flow really is king.
It is.
But how do companies like Apple, with mountains of cash, we're talking about billions of dollars,
Yeah.
how do they approach this? They must have a whole different set of challenges, right?
Right. For companies like Apple, the focus shifts from simply having enough cash to strategically managing and deploying it.
Okay.
They invest billions in short-term securities like U.S. Treasury bonds.
Okay.
This keeps their cash liquid while generating a small but steady return.
So they're making their money work for them even in the short term.
Yeah, exactly.
But are there downsides to that approach? Are there risks that Apple might be taking by tying up so much cash in that way?
Well, one risk is that they could miss out on higher returns by investing in riskier assets.
Right.
Another is that if interest rates rise significantly, the value of their bond holdings could decrease.
Okay.
But Apple clearly believes the benefits of liquidity and stability outweigh these risks, especially given their massive scale and consistent profitability.
That makes sense. They have the financial cushion to maybe play it a bit safer.
Yeah.
But what about companies with a different risk appetite or financial situation? Do they all follow Apple's playbook?
Not at all. Take Microsoft, for example.
Okay.
They manage over $130 billion in cash reserves
Wow.
across global accounts.
Okay.
This allows them to optimize for things like taxes and interest earnings by strategically positioning their cash in different regions.
So it's almost like a global chess game with their cash.
Exactly. They have teams dedicated to analyzing global interest rates, currency exchange rates, tax laws to ensure their cash is working as efficiently as possible.
It sounds very complicated.
Yeah, it's a very sophisticated approach, but it requires a lot of expertise and constant monitoring.
It sounds like there's a lot more to cash management than meets the eye.
Absolutely.
It's not just about having enough. It's about understanding how to make it work strategically.
Yes.
But what about those external factors that can really throw a wrench into even the best laid plans? Things like big currency swings or, interest rate hikes.
Yeah.
How do companies manage those risks?
That's where hedging strategies come into play, and this is where things can get quite complex.
Okay.
Hedging is about minimizing potential losses from those unpredictable market fluctuations.
So it's like taking out insurance on your revenue in a way.
That's a good analogy.
Okay.
For example, a company like Coca-Cola with huge international operations.
Right.
uses foreign exchange or FX hedging.
Okay.
They might lock in exchange rates for future transactions using forward contracts.
Mm-hmm.
This protects them from losses if the US dollar strengthens and their international sales translate into fewer dollars back home.
So they're essentially creating a predictable financial environment, even in the face of all this global uncertainty.
Yes.
But how do they decide which hedging instruments to use? Is it a matter of just picking one and hoping for the best?
Not quite choosing the right hedging strategy depends on a number of factors, including the specific risks they're facing, the time horizon they're looking at, and their overall risk tolerance.
Okay.
A company like General Motors, for example, might use interest rate swaps to manage the risk of rising interest rates on their debt.
So different instruments for different risks and situations.
Right.
It's starting to feel like a high-stakes game of financial Tetris.
It can be.
But it makes sense you have to choose the right tool for the job.
Exactly.
So we've talked about managing existing cash flow, mitigating risks.
Mm-hmm.
But what about when companies need to raise capital either for day-to-day operations or, those big strategic moves?
That's where funding strategies come in, and Treasury teams are central to this decision-making process.
Okay.
They need to balance short-term financing needs with long-term growth objectives, always keeping an eye on the overall financial stability of the company.
I see. So it's about choosing the right type of funding for the right purpose.
Exactly.
It's like choosing between a credit card for a quick purchase versus a mortgage for a long-term investment.
Right. For day-to-day operations, a company like Amazon might use commercial paper, which is a form of short-term unsecured debt that's relatively inexpensive and flexible.
Okay.
It's like having a revolving line of credit for their working capital needs.
Okay, so commercial paper for the short term. But what about funding something bigger, like building a new factory or investing in a major research project?
For those big-ticket items, companies like Tesla often turn to corporate bonds.
Okay.
This allows them to raise large sums of capital for long-term investments while locking in a fixed interest rate.
Okay.
Of course, it also adds to their overall debt load, so it's a decision that needs to be weighed carefully.
So it's not just about accessing capital. It's about choosing the right type of funding that aligns with the company's strategic goals and risk tolerance.
Exactly.
This is all starting to paint a much clearer picture of just how crucial Treasury management is.
It is.
It really is like the conductor of a financial orchestra, making sure all the different parts are working together in harmony.
That's a great way to put it. But keep in mind, this is just the tip of the iceberg.
Oh, wow. Okay.
Treasury management is a constantly evolving field, especially with the rapid pace of technological innovation and the increasingly complex global landscape.
So much to consider.
Yeah,
Sounds like we have a lot more ground to cover.
we do.
Before we move on, though, let's just take a step back and make sure our listeners are on board.
Yeah.
What are the key takeaways you want them to walk away with from this first part of our deep dive?
Well, I think the main point is that treasury management isn't just a tactical function.
Okay.
It's deeply strategic.
Mm.
It's about making decisions that affect a company's ability to not only survive, but thrive in both the short term and the long term.
Okay, that makes sense.
Yeah.
It's not just about counting the beans. It's about understanding how those beans contribute to the overall health and growth of the company.
Right.
But this all sounds pretty theoretical.
Yeah.
What does this look like in the real world? Are there companies out there that are doing this really well?
Absolutely. There are companies that are leading the way in terms of strategic treasury management, and their approaches offer valuable lessons for any finance professional.
Okay, awesome. So let's get into it then.
Let's do it. So let's start with Google.
Google.
They've been recognized for their really proactive approach to something we touched on earlier, financial resilience.
You mean their ability to kind of weather those financial storms and come out stronger on the other side?
Exactly. And one of the ways they do this is by diversifying their revenue streams.
Right.
They're not overly reliant on any single product or market.
Right.
This spreads their risk and creates a more stable financial foundation.
So you're not putting all their eggs in one basket.
Right.
That seems like a smart move, especially in today's kind of unpredictable global landscape.
Yeah, absolutely. And they're also incredibly strategic about their relationships with their lenders. They cultivate strong partnerships and maintain open communication, which gives them greater flexibility and access to capital when they need it.
So it sounds like they're treating their lenders as partners,
Yeah,
not just sources of money.
exactly. And it's a smart move. Having those strong relationships in place can be crucial when navigating challenging economic conditions.
For sure.
But it's not just about diversification and partnerships.
Right.
Google's also known for its really sophisticated approach to risk management.
So they're not just trying to avoid risks, they're actively anticipating and managing them.
Right. They've developed really detailed contingency plans for a wide range of potential disruptions, from natural disasters to cyber attacks.
Wow.
They even run simulations and stress tests to assess their preparedness and identify potential weaknesses.
So they're not just hoping for the best, they're actively preparing for the worst.
Yeah, it's a very mature approach to risk management,
It seems like it.
and it's all driven by data.
Okay.
They've invested heavily in advanced analytics tools that allow them to monitor their financial performance in real time and identify potential risks before they become major problems.
So they're using technology to enhance their decision-making and stay ahead of the curve.
Exactly.
That seems like a key takeaway for any company looking to improve its treasury management.
It is. Embracing technology is no longer optional. It's essential for effective treasury management in today's data-driven world. But it's not just about the technology itself. It's about how you use it to gain insights and make better decisions.
Makes sense. So Google is definitely a leader in this space.
Yeah.
Are there other companies that stand out in terms of their strategic treasury management?
Of course, another company that's doing a great job in this area is Amazon.
Okay, Amazon.
They're known for their relentless focus on customer satisfaction, but they're also incredibly savvy when it comes to financial resilience.
Yeah, I can see that they've managed to disrupt pretty much every industry they've entered, so they must be doing something right.
Yeah.
What's their secret sauce?
Well, one of their key strengths is their laser focus on cash flow.
Okay.
Their business model is designed to minimize working capital requirements and maximize cash conversion cycles.
Can you break that down for me? What does that mean in practical terms?
Essentially, they're incredibly efficient at turning inventory into cash.
Okay.
They keep their inventory lean, negotiate favorable payment terms with their suppliers, and collect payments from their customers quickly.
Got it.
This constant flow of cash gives them the financial flexibility to invest in new initiatives and weather economic downturns.
So they're not letting cash sit idle.
Right.
They're constantly putting it to work.
Exactly. And this is especially important for a company that's growing as rapidly as Amazon.
Yeah.
They need that constant stream of cash to fuel their expansion. But it's not just about generating cash. It's also about managing their debt strategically.
Okay, so they're not afraid to borrow money,
Yeah.
but they're doing it in a way that makes sense for their long-term goals.
Right. They've used debt financing to fund their growth, but they've done so in a way that maintains their financial flexibility.
Okay.
They're careful not to over-leverage themselves, and they focus on securing low-cost financing options.
It sounds like they're striking that balance between using debt as a tool for growth while avoiding the trap of becoming too reliant on it.
Exactly. And like Google, they're also investing heavily in technology to optimize their treasury operations. They're constantly looking for ways to automate processes, improve data analysis, and enhance decision-making.
So it's not just about the size of their treasury team. It's about their ability to leverage technology to do more with less.
Precisely, and this focus on efficiency and innovation has allowed them to stay ahead of the curve and maintain their financial strength, even in the face of intense competition.
That's impressive. So we've got Google and Amazon as shining examples of companies that are getting this right. Are there any other companies you'd like to highlight? Maybe one that's faced some challenges but managed to turn things around.
That's a great point. It's also important to look at companies that have navigated rough waters and come out stronger.
Yeah.
A company that comes to mind is General Electric.
GE. That's interesting. They've been through a lot in recent years. What can we learn from their experience?
Well, for decades, GE was considered a paragon of corporate success.
Right.
But over time, they made some strategic missteps,
Okay.
particularly in their financing arm, GE Capital. They accumulated too much debt, and some of their core businesses started to struggle.
So they were facing a real crisis.
Yeah.
How did they respond? What steps did they take to restore their financial health?
They realized they needed a drastic overhaul
Oh,
and embarked on a major restructuring plan. They sold off non-core assets, significantly reduced their debt, and streamlined their operations to focus on their most promising businesses.
So they were willing to make tough choices and shed parts of the company that were no longer strategically important or were dragging them down.
Exactly. It was a painful process involving layoffs and divestitures,
Right.
but it was necessary to get back to a solid financial footing.
Okay.
They also brought in new leadership with a fresh perspective and a commitment to rebuilding trust with investors and the market.
And how did it work out? Have they managed to turn things around?
It's an ongoing journey, but they've made significant progress.
Yeah.
Their financial position has stabilized, and they've been able to reduce their debt burden considerably.
That's good.
They're now focusing on investing in their core industrial businesses, areas where they have a strong competitive advantage.
So it's a story of resilience, a testament to the fact that even companies that face major setbacks can bounce back if they're willing to make tough decisions and adapt to changing circumstances.
Precisely, and it highlights the importance of having a strong treasury team in place.
Yeah.
One that can guide the company through those turbulent times and help it emerge stronger on the other side.
It's amazing how these different companies have approached treasury management in such diverse ways. But what's the common thread that runs through all of these examples, both the successes and the comebacks?
I think the common thread is a deep understanding of the principles of financial resilience and a commitment to putting those principles into practice.
Well,
It's about having a clear vision of the future, anticipating potential risks and developing strategies to mitigate those risks. It's about being proactive and adaptable, not reactive and rigid.
so it's not just about crunching numbers or following a set of rules.
Right.
It's about having that strategic mindset, that ability to see the big picture and make decisions that support the long-term health of the company.
Exactly. And it's about recognizing that treasury management isn't just a back office function.
Right.
It's a strategic partner to the business one that can help the company navigate the complexities of the financial world and achieve its goals.
This has been a fascinating look at how companies like Google, Amazon, and GE approach treasury management. I think it's clear that they've all embraced that strategic mindset you're talking about. But how does this all tie back to the listener, to the individual finance professional? How can they develop those skills and make themselves valuable assets to their companies?
That's a great question, and it's something we'll explore in more detail in the next part of our deep dive. We'll shift our focus from these big picture examples to the practical steps that finance professionals can take to enhance their own treasury management expertise.
Okay, ready to get tactical.
Yeah.
Let's dive into those practical steps and see how our listener can apply these lessons to their own career. All right, so let's shift gears and get a little bit practical here.
Okay.
We've seen how some of these major players like Google and Amazon are approaching treasury management strategically.
Right.
But what about the individual finance professional who's listening right now? What steps can they take to develop their expertise in this area and really become a valuable asset to their company?
That's a great question, and it's something that's top of mind, I think, for a lot of finance professionals these days.
Yeah.
It's no longer enough to just be good with numbers.
Right.
Treasury management is becoming increasingly complex, and demanding it requires kind of this blend of technical skills, strategic thinking, and a global mindset.
For sure. So where do you even begin? What are some of the key areas that finance professionals should focus on if they want to excel in treasury management?
Well, first and foremost, you need to master the fundamentals.
Okay. Back to basics.
Yeah, this means having a deep understanding of things like cash flow forecasting,
Okay.
working capital management, and debt management principles. You need to be able to analyze financial statements, assess risk, and make sound financial decisions.
So it's like making sure you have that solid foundation.
Yeah,
But treasury management is also becoming increasingly technology-driven, right?
absolutely.
What role does technology play in developing expertise in this area?
Technology is absolutely transforming treasury management, from cloud-based platforms to advanced analytics tools. There's a whole suite of solutions out there that are automating processes, improving efficiency, and providing real-time insights.
Okay.
Finance professionals really need to embrace these technologies and become proficient in using them.
So it's not just about understanding those financial principles,
well-
it's also about knowing how to leverage technology to apply those principles more effectively.
Yeah.
What specific technologies should finance professionals be familiar with?
Well, there are several key areas.
Okay.
One is treasury management systems, or TMS.
Right.
These are software platforms that help companies manage their cash flow, their bank relationships, and their financial risk. Some popular examples include Kyriba SAP Treasury and Oracle Treasury.
So these systems essentially provide a centralized hub for managing all aspects of treasury.
Right.
What other technologies are important?
Data analytics is another crucial area.
Okay.
Tools like Tableau and Power BI
Yeah.
allow treasury professionals to analyze large data sets, identify trends, and make data-driven decisions. This is becoming increasingly important as companies generate more and more financial data.
It's like having that crystal ball that helps you anticipate future trends and make more informed decisions.
Exactly. And then there's a whole world of automation technologies like robotic process automation, or RPA.
Right.
These tools can automate repetitive tasks.
Okay.
freeing up Treasury professionals to focus on more strategic activities.
So it's about working smarter, not harder.
Exactly.
Using technology to streamline those routine tasks and focus on the things that really add value.
Right.
But treasury management isn't just about numbers and technology, is it?
No, it's not.
There's also a human element to it.
Absolutely. In fact, I'd argue that the human element is becoming even more important in today's complex business environment.
Okay.
Treasury professionals need to be strong communicators, collaborators, and problem solvers. They need to be able to build relationships with stakeholders across the organization and explain complex financial concepts in a clear and concise way.
So it's those soft skills that really set you apart.
Yeah.
The ability to communicate effectively, build trust, and influence decisions. Those are skills that can't be automated.
Exactly. And I think that's an important point for finance professionals to keep in mind.
Yeah.
As technology continues to evolve, the role of the human in treasury management will become even more focused on those strategic and interpersonal aspects.
Right. Okay. So we've got the technical skills, the technology proficiency, and the soft skills.
Yeah.
Is there anything else that finance professionals can do to kind of enhance their expertise in treasury management?
One of the best ways to develop expertise is to seek out opportunities for continuous learning.
Okay.
There are a number of professional certifications like the Certified Treasury Professional, or CTP,
Okay.
that can demonstrate your knowledge and commitment to the field.
So it's like getting that stamp of approval from the industry, showing that you're serious about your craft.
Right.
What about networking? How important is it for treasury professionals to connect with others in the field?
Networking is absolutely crucial. Attending industry conferences, joining professional organizations, and connecting with peers online can provide valuable insights, best practices, and career opportunities. It's a great way to stay up to date on the latest trends and expand your network.
It's like building that community of support and knowledge sharing,
Yeah.
where you can learn from each other's experiences and challenges.
Exactly. And don't underestimate the power of mentorship.
Right.
Finding someone more experienced in the field who can guide you and provide advice can be incredibly valuable.
It's like having a seasoned navigator to help you chart your course through the complexities of treasury management.
Precisely. And I would add that having a global mindset is increasingly important.
Okay.
As businesses become more interconnected,
Yeah.
treasury professionals need to understand the nuances of operating in different markets, managing different currencies, and navigating different regulatory environments.
So it's about expanding your horizons and developing a global perspective
Right.
that can be done through international assignments, working with global teams, or simply staying informed about global financial trends.
Absolutely. And it's not just about the technical aspects.
Right.
It's also about cultural awareness, understanding different business practices and communication styles.
This has been incredibly insightful.
I'm glad.
It's clear that treasury management is a very dynamic and challenging field, but it also offers these incredible opportunities for growth and impact.
Yeah.
As we wrap up this deep dive, what are some final thoughts you'd like to leave our listener with?
I would say that treasury management is really at the heart of modern business.
Okay.
It's about much more than just managing money.
Right.
It's about strategically enabling a company's vision, its growth, and its resilience. And for those who are drawn to this blend of strategic thinking, financial expertise, and cutting-edge technology,
Yeah.
it's a career path that's both rewarding and full of possibilities.
This deep dive has certainly shed light on a world that's often overlooked, but is absolutely essential for any company's success.
It is.
Thanks for guiding us through this fascinating landscape.
It's been my pleasure. I always enjoy these deep dives with you.
And to our listener, thank you for joining us on this exploration of treasury management. We hope you've gained some valuable insights that you can apply to your own career journey. Until next time, keep learning, keep exploring, and keep diving deep.
Thanks for listening to Corporate Finance Explained. If you found this episode valuable, be sure to check out more episodes and explore CFI's highly rated courses at corporatefinanceinstitute.com. Don't forget to subscribe for more deep dives into essential finance topics. See you next time.